Hello and welcome to tradingcorner.com. The future of relationship with Greece and the Eurozone still hangs in the balance, with the latest challenge for Greece is a bond redemption coming up on the 20th of August. Now, with me to discuss the finer points of this bond redemption is our FX editor, Matti Williamson. Matti, how are you going?
Hi, I'm great, Joma. Thanks. How are you? How was the weekend?
Yeah, the weekend was good. It was good. Could be longer, but these things, all good things come to an end.
It's always like this, Joma.
Yeah, it is.
It never ends.
It is. So basically, these bond redemptions, can you just give us an overview of what part of the cycle is this bond redemption? It's obviously at the end.
Sure. Just for example, I'm going to take a country because we are discussing Greece. If a country has a certain debt or it wishes to raise funds for infrastructure, then they sell a certain amount. When what they're actually saying is, you, Joma, give me, for example, 100 euros, and within a certain period of time, I will give you the money back with a certain interest on the amount that you gave me. Bond redemption is Greece paying back the money that it raised from a certain auction with the given rates. What's interesting about this bond redemption on the 20th of August, which is estimated, if I'm not mistaken, to be 3.1313 billion euros, is that most of the funds that Greece needs to pay are owned by the European Central Bank, the ECB. Greece has asked for a bridge loan from the Eurozone of the EU Commission, and they have been refused. Or this big uncertainty whether they will be able to raise those funds, which leads the financial markets to think whether the ECB will absorb losses on this specific bond redemption.
So what does that mean? That basically means taking what's known as a haircut?
Yes, there's going to be a haircut, or at least this is what the ECB is being pressurized to do. The total haircut may be up to 5 billion euros, but of course this may change as soon as we need the 20th of August. I know that the IMF, or the International Monetary Fund, are pressurizing the ECB to absorb losses. As you know, Troika visit to Greece back in July. Although there's been many talks, Joma, about productive talks and improvements and so on, in my opinion, this is pure nonsense.
So is this probably to keep the market more calm before a much bigger storm?
Yes, this is exactly it. And Troika are now assessing the current situation. They will produce the final report on sometime in September. I think it's the beginning of September, but I don't recall the exact date. So 20th of August, big bond redemption. If the ECB will be forced to absorb losses, then we're discussing, like you mentioned, a second haircut on public bonds. This is unlike the previous restructuring of Greece's debt. The actual percentage, it's a wild guess, I have to admit, but the actual debt restructuring may be between 16 to 18%. That's 16 to 18, but this is a wild guess. We just have to wait and see. And that's why I'm very surprised why traders, or I've seen a lot of analysts, believe Euro-dollar will keep rising, Joma.
Now, does this give us any clearer indication of if or when there will be a Greek exit, or are we still in the dark about that?
Yes, we're still in the dark. I know that central banks are preparing for an exit, but I think it's too early to discuss it at the moment. What's going to call, I guess, the main shots will be the German Constitutional Court's decision on the ESM, on the European Stability Mechanism, that is due on the 12th of September. If the German Constitutional Court will reject the ESM, then the odds of Greece exiting the Eurozone will automatically increase.
Now, what else have you got cooking? We're going to have a quick look at some technical data or some charting.
Yes, there's a couple of things I've noticed. I will start with the Euro-dollar's daily chart. This is something that for some reason everyone is discussing, and I don't understand why, to be honest. But I'll show you what first I'll tell you what most analysts have been quoting or been suggesting, and I'll explain why I slightly disagree. I have a reversal pattern called reversed head and shoulders. If I'll change the chart from a candlestick chart into a line chart, sorry, not this one, I see I have the downtrend. This is the left hand shoulder, this is the head, right hand shoulder, and now I'm seeing the breakout. As you can see, the euro dollar breached the neckline in the daily chart. What we just witnessed in today's session is known as a correction or a retracement to the neckline, and the fact the euro dollar hasn't breached 23.34, this is my neckline, we should expect to see further gains. And I can tell you that the target of the reversal pattern lies at, I would say, 26.10 at most. This is, however, a full correction to 26.75. I personally disagree with this view, and I'll tell you why. If I'm going to scroll back, I can see I had head and shoulders right here. I switch it to a line chart again. I had the downtrend. This is a left hand shoulder, the head, right hand shoulder, the breakout, and as you may see, it didn't really produce anything. And I think the key to euro dollars head and shoulders on the daily chart lie in the weekly chart. If you can see, Joma, I have an ongoing downtrend in euro dollar since, I would say, the beginning of 2012. If you can see, I'll switch it to line chart again. This is pretty much the dive downtrend, small retracement, and then a continuous to the downtrend. And what I have right over here is a correction similar to the one I had in April. This doesn't imply a strong uptrend. I mean, I'm going to minimize the chart a bit more. I would say if there will be any gains, they are likely to stall around 24.70 or even 24.50, and we should witness a retracement below 20.54. I would say this is a full correction back towards 19.26 at most, but I fail to see any reasons for euro dollar to gain. And again, I'm going back to the head and shoulders reversal pattern on the daily chart. Small gains, I would say, and then a very sharp retracement back towards the 2000 levels. I can't really predict a date, but I would say the upcoming bond redemption could be the catalyst for the strong selling in euro dollar. So we just have to keep following the fundamentals and of course the technicals of the euro dollar's daily chart as well as the weekly chart.
And you've also spotted an interesting breakout in cocoa. Do you want to quickly run us through that?
Yes, cocoa is actually very interesting. Do you trade cocoa, Joma?
No, I don't. I drink it. I just had one just now, actually.
Well, I'll tell you something. Cocoa may become a bit more expensive, I guess, in the upcoming months, and I'll explain why. I had a triangle on the weekly chart. I've been following it for several weeks now, and as you may see, it broke outside the triangle last week. I'm just going to zoom in a bit. Sorry, one sec. Right, if you can see, this is my triangle. You can see the graph has been going sideways within the triangle, and based on last week's session, I have a breakout. The current session, or today's or the following week's candlestick, had a small pullback towards the upper level of the triangle, and from then on we should expect to see moderate gains. I can't rule out a deeper retracement towards I would say 2320 at most, and from this level onwards we should expect to see a bullish correction towards 2737. It's not going to do it in a day or in a couple of days. It may take a month or perhaps a couple of months to reach the target, but this bullish breakout dictates that cocoa should keep rising, which means your cocoa, Joma, will become more expensive.
Well, as long as they don't put a coin slot in the office here, I should be okay.
Yeah, I should be fine.
Yeah.
Sorted.
Yeah.
But just a small note, I'm uncertain if it will correct it back to 2320 before rebounding. This could very well mean we already witnessed a correction, which means the target or the initial target of a release should be around the 2,400.
Yeah, excellent. Look, Matti Williamson, thank you for your time. Now we can find you on Twitter, is that correct? What's your Twitter account?
Yes, my Twitter account is actually very simple. It's my name, Matti Williamson.
At Matti Williamson, and we're also on at Trading Quarter as well. And don't forget, you can visit tradingquarter.com for the latest in global markets and technical analysis from people like Matti Williamson. Thank you, and we'll see you next time.
Thank you, Joma.
Thank you, Matti.
Take care, and good luck with the cocoa.
Thank you.